Happy Friday, everyone. It's 8:04 a.m. Chicago time on the 19th of October, 2018. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I hope you can hear me loud and clear. I'm on my laptop. We may experience some lags, but we'll try to hang in there and get through it. This morning, the sentiment is risk on, slightly risk on. Crude oil leading the pack. Was up as much as 1% this morning, trading at 69.31. Big reminder today that crude, the last day to trade crude is today. So if you haven't received a notice from your clearing firm and you're in a crude contract, you need to roll that contract or close it by the end of the session today. You should be trading December crude at this point. So remember, if you have a November contract open, it needs to be closed today. The other thing to note is its options expiration Friday for the monthlies, third Friday of the month. And we've had quite a bit of movement with the VIX climbing over 28, quite a bit of participation. Option volume has been climbing. Um, Option volume has been climbing, and so we're looking and we're kind of moving back and forth through this major strike price at 2,800 in the ES and across other products, 7,200 Nasdaq and so on. So just pay attention to that. And yes, if you hold a crude contract through expiration, you need to be ready to receive 1,000 barrels of crude per contract and put up $68,000 or $69,000 per contract to receive it. It's a physically delivered product. You do not want to hold that into expiration. Anyway, so that's where we are. The laggard today is the DAX getting hit. It's showing a 0.54% 0.54% drop. Lots of news out of Europe. The Europeans are struggling with Italy. The Eurozone and Italy are on a clash course currently, and that's causing a little some jitters. There's also a lot coming out of OPEC. There's a lot of discussion among the OPEC members about supply and what crude prices should look like. And there's this weird. It's a um, news cycle based trade right now. There's pretty good participation on both sides. There's some really good battles this week between buyers and sellers, the bulls and the bears, and we see it in the higher volume. Yesterday we almost hit 2 million contracts in the pit session. And this is how bottoms are established generally. I'm not saying we're bottoming out just yet, but this is how it's done. We generally don't, when we make a high, we don't generally make a high and just sell off right away. We generally balance and jockey around a little bit before we start to rotate. And same with a low. The overall trend of the market is still to the upside, even though we're teetering around the 200 moving average on the SPX. So overall, there's just there are a lot of reasons for participants to be in the market currently. The only thing we have ahead of us today is a 10 o'clock existing home sales, just a half hour after the open, expecting 5.29 million units. And then we have Fed Speaker Bostic, BOE Speaker Carney, and Fed Speaker Kaplan around 12 to 12:45 Eastern U.S. time. I expect this to kind of die out right after the European close today. Anyway, let's review what we expected yesterday. Okay. And let me say that it's really hard to be on, so to speak. So Yesterday, we were looking for the main idea from yesterday is the continuation higher, the break of that 2819 area. Expected the market to drop initially, and then was looking for a base and for it to climb a little bit of this or this. That's what we're looking for yesterday. Is we were pushing away from, uh, you know, we're pushing through 2800 back and forth. I expected it to drop, find a price at which buyers can participate, and I expected overall that we would end up one way or another breaking that 2819 top, which is a weak double top now on the daily. That didn't happen at all. Both scenarios, we ended up with a sell-off scenario yesterday. Both scenarios did not work. We did make an attempt higher, but it was really feeble. So if we look at what we've done, bit of a lag here. Um, what happened to my opening swing? So my opening swing is off here. What we did is we had a sort of a drive on the open down. We pushed up just 3 ticks, and then we pushed lower on pretty good delta, consolidated consolidated for a while, and then we popped. We kept extending the OS low, and then we popped higher to 2808, and it looked like we're heading for the 2811, the most valuable price or the most traded price from the prior day. We opened right on top of the low volume node here, right on top of 2800. A very precarious area to open, very noisy area to open, but the buyers couldn't hold it, and then so we crossed underneath the um, the mid. We pulled back right to the mid right there, and then back to the IB low. We had a double IB low stat. We had a double IB low stat play out here. The double IB low, and this may be stale, but it shouldn't vary all that much. Approximately 83% historical probability that we would break the IB low or double IB high by the end of the session. Double IB high is slightly lower at 82%. Those numbers might have gone up to 86 or so percent. It doesn't really matter, but there's a high probability that when we see a double bottom at the IB, we're likely to break it. Essentially, a weak low. Once we broke through, though, we started to run away. I mean, we couldn't really pull back to the mid at all. I found that I wasn't here for a lot of the trade, but when I did come back in this area here, I found that it's really a scalper's market. Um, it's pushing up and down. Pretty good, pretty good rotations for scalping. You can see the rotations down here, and you can see those peaks are pretty high. 10 points, 5 points, 8 points, 6 points, 10 points. Uh, makes for a pretty good scalping market. Tough to hold on to positions though in that situation. And that's basically what we ended up with yesterday. Yesterday, we had a double distribution profile. What the heck? We had a double distribution profile, and it was neutral down. We didn't quite get a neutral extreme, but it was neutral down with the IB area 2790 being the low volume node. So 27 initially 2786.75 on this pullback, and then another low volume. This whole range between 87 and 90 is a low volume node and something to track going forward. So that's that. Looking at the overnight as we come into our session, Another session. Remember this overnight from yesterday? Pretty bulky. Looks like we're not likely to do anything or go anywhere. We have a similar overnight session inverted. The market yesterday was generally floating downwards. Today it's generally floating upwards. We are above the mid. We are at the overnight point of control. We are above VWAP. We just tested VWAP from above. This is what that looks like. I'll show you the volume scope chart. Here it is. We push through. Pretty good strength there at 6 o'clock my time, Chicago time. And then we extend, and then we have a pretty good delta to the downside, pulling back, and then we push right into the overnight VWAP, the mid, the overnight mid and VWAP in the same area here, and then we're consolidating up here with the point of pretty crowded area right here. And the overnight session had almost triple the expected volume. Quite a bit of activity, a lot of it driven by China growth concerns. They've had the lowest growth since 2009, and then the European question with Italy. Okay, so that's where we are. Hopefully, you can see and hear me loud and clear. For today, what are we expecting for today? Today brings us to a pretty interesting spot because we are basically overlapping where we've been since the drop last week. And so what we have today is a market that essentially is, let's take it from here, that's essentially balancing on top of itself and holding steady at the point of control. The point of control in this area is 70, 72. And I can move it back one more actually because that day was balanced as well. So let's shift this back a bit. Sorry, hang on. So today we are opening right in that balance area, the MC balance area. I'm not anticipating too much action. I do anticipate a continued kind of flip-floppy trade where we see strong rotations up and then strong rotations back. You see that in crude as well, and that's what I'm looking to. But before we get into that, I'd like you to take a moment and find the like button on YouTube and hit it. It is Like Friday. Please take a moment to just give us a thumbs up. It helps us out in the long run. So what are we looking for in our scenarios? Well, no, we're not in the review segment. What are we looking for in our scenarios here? The primary idea for the day. Sorry, hang on. There's news coming across. The primary idea of the day, I'm looking for an open auction. Again, we keep opening right into the prior day's value. Open auction, I'm looking for to drop into yesterday's point of control into the 71 area and then to consolidate, push through. I'm looking for an impulse up. I'm looking for it to start to work its way back up to the upper distribution today. So again, almost the same as yesterday. We have potentially started one-time framing down. I do not expect us to take out yesterday's high, but I'm expecting the market to respond to these lower prices today by buying. We're going into the weekend, and there are some question marks there for participants for the weekend. But overall, uh, I'm expecting that we're likely to make an attempt higher. The secondary open auction. Why open auction? Because we are in range of yesterday. We're in range and in value of yesterday, so I expected it to be an accepted two-way trade. Although yesterday it just dropped right out. We were right on the low volume node. I'm looking for this to squeeze down the secondary scenario to squeeze down and just work a squeeze for lower low. So I'm looking for this to make its way through and push into 2750, 2747, and potentially even 2738 before we get the bounce into the close. So the thing with this trade this week, honestly, is that it's most of my trades are initiated as scalps, and then I'm looking to build into a position. I'm still using my stock zones as I always have. I'm still looking for day type structures, things that are built on the day. But overall, I'm very, very cautious because if you look again at the volume scope, so those are the scenarios. If you look at the volume scope, if I scroll back in time and you look at this volume scope, you'll notice that the market rips up and just falls on itself. Well, this is the overnight session, but here's a quick drop and it just comes right back up. It's not. It's really um, a challenged kind of auction. Every time we look like we're done to the top side, we end up pushing higher, just like you see here. So push, continuation, rotate down, and a strong push down, and then an opposing strong push higher for pretty much the same magnitude. 2,000 delta up, 2,000 delta down. So it's a perfect environment. The point I'm trying to make is it's the perfect environment. Um, it's the perfect environment for people to get absolutely crushed if you do not obey your risk and you start to get emotionally involved with the market. Good luck today, and I'll catch you on Monday. Have a nice weekend. Take care, everyone.